Hello and welcome to the look ahead for this week, in which we'll be holiday shortened only to Memorial Day on Monday. In terms of Tuesday's session and coming towards the latter stages of US trade, we have seen equities come under a degree of selling pressure since the open on Wall Street. This coming after two real main things. A lot of focus in Europe has been on the situation of Greece, of which we have seen the negotiations somewhat deteriorate once again, as Greek official comments over the weekend were suggestive that they might not be able to make payments to the IMF due in the month of June, which total around 1.6 billion euros, the first payment of which, the first instalment, on June 5th, so not too far away. That did prompt some fairly aggressive re-widening of the Greek-German 10-year government bond yield spread, put the euro under a bit of pressure and a safe haven bid into the US dollar, which in turn has weighed on crude futures, with WTI settling under NYMEX pit down by around $2, which has weighed on the energy sector in the S&P today. Also, we've seen economic data out of the US all coming in decidedly better than expected, this taking greater importance given the Fed's current data dependency stance. So we had durable goods orders. The core numbers, the components, did come in quite a bit higher than expected, with upward revisions to the previous. That did also prompt the likes of the Fed Atlanta GDP Now tracker, which is being closely followed given its dating, or it gets updated very quickly after data. And that has been also revised upward to 0.8% from 0.7%. This, in addition to US consumer confidence and new home sales coming above expectation, has once again shortened some of the market's expectations about potential Fed rate liftoff timeline, and as such has pressured equities, in tandem with the fall in energy weighing on some of those related names and the concerns on Greece. It doesn't stop there this week in terms of major US data. On Friday, we'll see the release of the second reading of US GDP. We'll also get Chicago PMI and the University of Michigan Sentiment May final reading, which could all have the propensity to move the market given the current Fed stance on economic data. Otherwise, other things to be aware of. We'll continue to monitor the news wires for any developments on Greece, the market and the euro currency in particular, still very much in focus and in vogue in terms of a news topic. And then on Wednesday, tomorrow, we'll also have the Bank of Canada interest rate decision, where surveyed analysts are very much expecting them to keep their main interest rate on hold at 0.75%. Taking a quick look in the fixed income markets, given the softer equity market today on Wall Street, we have seen a general bid tone in the US T-note. However, in terms of the auction that we've seen today, which was a 2-year auction, it was fairly average. It stopped through by around 0.1 basis point, and the bid to cover ratio was slightly up against previous, but more in line with its 5 auction average, with dealers taking a relative small chunk against previous and a 5 auction average basis. However, pretty minimal reaction seen in the market, as participants will look to digest also 5 and 7-year and a 2-year floating rate note later this week. That pretty much though concludes the wrap for me for today. I wish you all a fantastic trading week.